unpack these movements now. We've got Martin Smith, Portfolio Manager at eNCA Capital. Thank you very much, as usual, Martin, for joining us this afternoon. Let's start with the overall market. I have mentioned that it's been a whirlwind week for the local market, I suppose in line with global markets, just based on the US jobs data that came out on Friday last week and the direction that the central bank in the United States is set to be taking. Your thoughts on some of the major drivers on the market today?
Yeah, absolutely. It's been a very, very volatile week. I suppose it's been a very volatile year. All eyes today were on the CPI numbers that came out of the US at about 2:30. Obviously, those numbers are disappointing a little bit. And I think that's the biggest driver of markets at the moment is what happens with US inflation, how do interest rates work from there, and are we going to see a recession? So a big driver of markets, and volatile is the right way to say it, because we saw markets initially selling off quite aggressively, specifically in the US. It opened down 3% and is now up about 1% as we speak. So volatility is absolutely the name of the game. It's not going anywhere.
No, absolutely. And of course, it obviously has an implication on the movements we see in the local currency. The Rand really struggling, Martin, to come back below 18 Rand against the US dollar. I mean, what are your thoughts in terms of the current movements? And might we see some form of improvement in the short to medium term?
I hope there's an improvement at some stage, but I think the dollar's just been absolutely bulletproof. I think when you have talk of recession throughout the world, if you look at what's happening in the UK and Europe, the like, as well as a US Fed that's probably going to be more hawkish than not, specifically on the back of the numbers that we saw today, the dollar is pretty much the only kind of game in town. So I think we'll see dollar strength for a while, but I do anticipate some Rand strength coming through as time moves on, because it is a little bit overbought at the moment, the dollar, that is.
Yeah. What about the price of Brent crude, Martin? Yesterday there was a drop from about $95 a barrel down to about 91. We've seen an uptick there again. I don't know, it worries me when we've got a weak Rand of this nature and then you've got the price of Brent crude hovering at the prices that it's at. For us that buy in dollar-denominated current products, it's just a bit of an issue. So what are your thoughts on the price of Brent crude, and if we're going to see a drop a little bit just because of a lesser demand given the fears of a global recession?
No, you're absolutely correct. It's a higher kind of oil price is negative from a couple of different levels, inflation being one of them, indirectly and directly. So we had OPEC Plus meet about a week ago. They decided to cut production by 2 million barrels a day. It's probably more likely 1 million barrels a day, given the quota that some of the people aren't meeting. Joe Biden has been quite short-sighted on the back of a lot of things that you just said there. I suppose it does come down to demand. Obviously, the supply side issues are very well known, Russia, Ukraine, etc. But it comes down to demand. Will we see a recession? What are interest rates going to do? What is inflation going to do? And I think that's going to be the biggest driver. Another one is also what happens with China and their COVID lockdown policy. If they decide to open up, obviously that can be quite a pickup to demand. So a lot of balls in the air at this moment in time. And I think it's also vital to point out that oil is kind of historically quite high at $95 a barrel.
Yeah, absolutely. And then finally, some company news. Grin Rod, that logistic specialist, them indicating quite a positive, I suppose, trading statement. We saw higher volumes it reported, welcoming the unbundling from Remgro, focusing on its strategic business in Mozambique, and also finalizing that sale of the bank to African Bank. But overall, what did you make of what they shared with the market today?
I'm in agreement with you. Very good set of numbers from them. Obviously, it was a 9-month trading update from the company. So there's two parts to it, really. One is kind of disposing of non-core assets, like you mentioned, and the other part is obviously the logistics side of things, which is doing very, very well from a trading perspective, and very, very solid set of numbers. And I think the market agrees with both of us, given that the share was up 6.5% close. So again, very good result, and I think the share can tick a little higher.
Martin, as always, thank you very much for joining us this afternoon. That is Martin
Smith,
Portfolio Manager at eNCA Capital, just giving us a wrap of the Markets Day.